Raamdeo, morning. Good to have you on the show. Let's start off by getting a broad call on the market. How are you reading it?
I think earnings outlook is still pretty optimistic, though the first quarter results were not that great. So let's see what happens in the second quarter, because we have the top line, we don't have the corresponding bottom line growth. So there is a pressure on the cost of production, and hence the margins are also under pressure. So hopefully by Q2 we'll be clear whether we are going to have a good year in terms of earnings growth or not.
It's tested us for time, this market, Raamdeo. You think it's ready for a breakout on the way up or down? I mean, what could be the trigger for this market to show you a decisive move either side of this range we've been stuck in for so long?
Corporate earnings growth, because that is what is in our control. I mean, there could be many more important things like what foreigners are going to do, what DIs are going to do, but we don't know. We can't control or predict how exactly they are going to behave. But as far as the corporate earnings are concerned, that's one place where I think we can have some understanding of it and anticipation. So if the corporate earnings do well, with a gap of 1 or 2 months, flow comes from either from domestic sources or overseas sources. So like you have seen in SBI, once the performance was good, irrespective of whether market has moved or not, the stock moved up by 20%. So I think what is important is whether there is a corporate earnings growth, and that's where our focus is.
Well, another example would be Tata Motors. Absolutely take that point, Raamdeo. Then what about valuations as a whole? We're probably around 16 to 17 times right now. Do you think there is enough liquidity in the system that if earnings deliver, then this multiple could go perhaps all the way up to 20 and take the market up along with it?
As early as March 2010, our valuations were about 20 PE multiple. So it's not something very impossible to get that by 2011 March of 20 PE multiple. The issue is whether that will happen or not. I don't have any view. I mean, but that is a very strong possibility that we may be there, particularly if inflation tapers down. By March they are saying 5-6%, and with this bumper monsoon we are going to have very good kharif as well as rabi crops. So I think there will be dislocating impact on the food prices, and that should help a lot in terms of lower inflation and hence lower interest rate regime and things like that. So by March next year to expect 20 P multiple is not that difficult.
FIIs will obviously have to play quite a role in that, Raamdeo. So what's your sense on fund flows from the FII fraternity? They've been very benign till now, deploying nearly $12 billion. If something very adverse, very significantly bad doesn't happen in the overseas market, should this trend continue? Is that a reasonable expectation?
As far as the outlook for the inflows are concerned, I think that still remains very positive, because India is still looking attractive in terms of growth and stability and predictability to the foreign investors compared to many other markets. So as far as the inflow is concerned, I think it is going to be substantial at the rate at which it has come in last 6-7 months. I think that $2-3 billion, I think that kind of a rate will continue, and hence we should do better than that of last year in aggregate. So we should be in the range of 20-25 billion for the whole year. So that looks to be the possibility, but whether that will move the market up or not, that's a very different question. I think market will move not because money has come in. Market will move because the corporate earnings are very well. Corporates are doing well. So if you want to understand where the market is headed, I don't think we should focus on the flow. We should focus on the fundamentals.
Then speaking of fundamentals, how is the EPS outlook for the year looking? Are you starting to downgrade from 1,020, 1,030 where you were last time you spoke with us?
Our research department is still saying that the EPS for the current year, consolidated EPS of entire Sensex companies should be upwards of 1,050. So we have still not downgraded the EPS for the Sensex for the current year.